About chapter 24, section 2. And the big idea here, once more, is that political and economic institutions evolve to help individuals and groups accomplish their goals. So you have money thanks to these guys. Otherwise, you would be trading with cookies or gold coins or something of value. And that's not a sustainable form of currency in a large population. Ergo, we need something like the Federal Reserve. And so you'll see some terms like central bank, monetary policy, and even open market operations. So we do operate in a free market economy, but there are these important controls and safeguards that you may not understand, that again, they don't care if you understand, but yet, since this is an executive level agency, meaning appointed by the president, this needs to be another layer of your decision making as you're figuring out who to vote for. So the first question I want to ask is, should the United States consolidate independent banks all into one national bank? Now, let me ask you a rhetorical question here. What is a bank? Now, if Addie had an entire truckload of cookies. I mean, when I took home ec, my favorite part of home ec, the biggest part I remember, is that the teacher had these boxes of the frozen chocolate chip cookies. Every now and then we would get to make them as a lesson. It was like my favorite lesson. Every now and then she would offer them up for sale. And I'd always try to have enough money to buy these little frozen chocolate chip cookies. I loved them. She could have ran a cookie bank. And I would have invested. Meaning that if she were to loan me a cookie, and I would have to pay it back with interest, she could have. If I were to hoard my cookies, say that I got 5 or 6 of these frozen cookies, and I don't need to eat 5 or 6 at one time. I need to save them. Well, I could put them in her freezer. So I'm going to save my frozen cookies. And maybe she's going to use those cookies to loan them out again with interest. We could work this metaphor out until she's a functioning independent bank. That's all a bank is you have an excess amount of wealth and you want to make money off of that wealth. You have so much wealth that people are coming to you to borrow money. And you have the safeguards in place to be able to loan them money with confidence. That's a bank. Get a few permits and congratulations, you're in business as a bank. You're loaning people money, you're collecting interest, you're taking their money and investing off of it, you're playing with other people's money. Isn't that how the business world is supposed to work? But the question is, what happens when you make bad decisions? When Dakota puts money in savings in my bank and I loan it to Jamie and Jamie's bread business goes bad and Dakota comes back and says, okay, I'm ready to withdraw my deposit, and I say, well, Jamie's business failed, I ain't got your money. Well, now Dakota doesn't have his money either. Jamie's bankrupt, Dakota's bankrupt, and the problem escalates. And that problem, if you can think about it, is why the Great Depression happened, is why the Panic of 1893 happened, is why so many of your parents lost their jobs in the Great Recession. And so the question is, what if those little independent banks, like the frozen cookie bank, had to play by the same rules as all the big banks? And the ultimate question, is it still a free market economy? If I have to play by all those rules, do I still get to run a free and fair business? Or is this, as some claim, socialism? A little about the Federal Reserve. Structure and organization. It is the central bank of the United States. Yes, the entire country as one big giant bank. And just like the little bank with the frozen cookies, or just like the little bank with me loaning to Jamie, the United States functions as a bank. It loans money to other countries. Yeah, other countries owe us money. And guess what? We owe a lot of people, a lot of other countries, money. Do you know there was a time in history we paid off our national debt? Once upon a time, we paid off our national debt. And the leaders of our country saw wisely that a debt was actually a good thing. There is a positive to having a degree of debt, to maintaining a functioning bank. But anyway, I digress. So, the Federal Reserve, we'll call it the Fed for short, because that's what you hear on the news, is the Fed. The Fed is raising interest rates, etc., etc. It is the central bank of the United States. That means it is an institution that lends money to other banks. Also, it is the place where the government does its banking business. So that means if we want to go to war with North Korea, well, guess what? Just like a bank, we have enough money in our account to maybe go to war with, say, Panama. I'd say we could beat up on Panama pretty easily and not go into any more debt. But if we wanted to invade North Korea, I mean, they basically armed the dogs at this point. So if we're going to go to war with North Korea, we're going to need more money than, say, a Panama-scale war. We're going to have to go into debt. Well, who's the government going to go to for this? The central bank. Just like Jamie would go to the central bank if he wanted to open his bread company, because he just doesn't have, say, 50 grand to get the doors open. So he's going to go to the bank and borrow. So the Federal Reserve was established by the Federal Reserve Act signed by Woodrow Wilson in 1913. And this created a federally chartered bank divided into 12 Federal Reserve districts. Now here's the thing. There are thousands of member banks within the Fed, meaning they own stock in the Fed. The Fed is just like a bank once more. And banks don't just do this out of the kindness of their heart. I'm taking Dakota's money and I'm profiting off of it by investing in Jamie's business. The Federal Reserve does the same thing. It's not a non-profit. It is a for-profit entity run by the federal government. So it takes, say, for example, Greece's money. So say that we loaned Greece money to bail them out because they defaulted on their loans to the EU recently. And I don't remember who bailed them out. We may have bought up part of that debt. I don't remember. Well, we didn't bail out Greece because we're good-hearted people. We're not. We're business people. Business and ethics, well, business and morality don't always play together. So we loaned Greece money because we aim to profit off of them. Now, these economic decisions, and I cannot emphasize enough how important these decisions are, they're made by a board of governors. These are people appointed by the President of the United States. So just like the United States Supreme Court, they are appointed by the President of the United States. Now the Senate has to confirm. Each member can serve as the chair for 4 years. So if you follow the news, the new chair of the reserve was recently appointed by President Trump. The reason it's set up this way in the articles in the Constitution is these people are to function free of political pressure. They don't care if you vote for them. In fact, often one who is appointed may still be serving out his term when a different president comes through. So they are to be an apolitical entity. If you guys are Game of Thrones fans, why is the Bank of Bravos significant? It's probably the most important organization in the whole thing. So if you miss that piece, that's okay. Well, the Bank of Bravos has loaned money to every significant family in the story. And anytime they go to war, they go to the Bank of Bravos. And if they can't pay their debt, the Bank of Bravos makes sure that family is destroyed. They're the ones who topple kingdoms. Not out of the kindness of their heart, but to maintain their profits. That's their job. They're free of political pressure. They ultimately don't care if Cersei Lannister is on the throne, if Robert Baratheon is on the throne, as long as they get their money. And that's what the Federal Reserve does. They don't care if President Trump is on the throne, if Hillary Clinton is on the throne, if Jill Stein had won. It's not their business. It's their business to make sure that they remain a viable entity, because their survival is paramount to the economic survival of our country. Because again, if we can't have a functioning system of currency, then we're back to trading cigarettes or cookies or whatever. Now, these different advisory councils report on the condition of the economy by district. Again, there are 12 districts. The health and wealth of the financial institutions in our country, and then even consumer loans. That is, okay, so Jamie borrowed money to start his bread business. The Fed needs to keep an accurate account of how his bread business is doing. Because you see, he borrowed the money. He technically owns the business in theory, as long as he pays his debt. When he stops paying his debt, it's not his business anymore. It's the bank's. You see, I'm a homeowner. Yay, I'm a homeowner. I've got 20 more years on my mortgage. When I can't pay that debt, I'm not a homeowner anymore. It's not really mine for 20 more years. And ultimately, that debt is overseen by these people. Now, the Federal Open Market Committee. And they don't need these names to be fancy. They don't need this to be some inspiring, yes we can message or what have you. No, they're going to call themselves the Federal Open Market Committee. But yet they may be the most important organization in the country because they manipulate the money supply. They're the reason your gas that I filled up this morning and was grumpy about cost $30. They could have hit a button and it would have cost $40. They could have hit a button and it would have cost $10. They manipulate the money supply. They manipulate the money supply. And granted, they are accountable to the President of the United States. And granted, he is accountable to the people of the United States. And so, in theory, and really in practice, this group does the best they can to keep a tight rein on this. In fact, the reason why, and we can debate the trade war all day with China, but the reason why President Trump has declared a trade war on China is because China's Federal Open Market Committee has been manipulating their currency values to advantage them in international trade. So in theory, the Federal Open Market Committee could say, hey, guess what, China? The dollar just doubled in value. Yay! Yay! Well, they could do that. They could. There would be global repercussions. But here's the reality. China has been doing that for decades. And even though the trade war concerns me, The theory behind it is that this is their day of reckoning. Now, many that question the necessity of this. If you remember Andrew Jackson, and I'm really not a fan of his legacy, he's the guy who kicked the natives out after all. But his other chief passion, aside from wanting to hang his own vice president, was destroying the Bank of the United States. He saw it as too powerful of an institution. And he said, if I do one thing in my presidency, well, he didn't say it that way, but he said,
You probably did, don't worry.
let me quote him verbatim. He said, the bank is trying to kill me,
Same.
but I will kill it.
Not same. Honestly, I tried to kill him too.
Now, he would have argued that the Fed is destructive, that it represents too much power in one place. Because after all, you guys have already said even today that money is power. And that even some of our elected representatives who have come in here have said, follow the money. And many of you have said, follow the money. Well, where's the money? Money's here. Functions of the Fed. What do? So they control the money supply, they serve as the government's bank, and they watch over the banking industry. Now, in terms of what is my personal opinion, I don't know. I mean, I kind of see both sides. To one, concentrating, consolidating all of our nation's wealth in one place is somewhat concerning. But at the same time, running a well-regulated economy, in theory, requires certain safeguards. And I think history has shown us that. Well, the Fed regulates banks. They also control the money supply. And lastly, they hold the government's money. These are their three chief functions. And I think we could make a strong case for each. Regulates the banks. What happens if I take all of Dakota's money and I loan it to Jamie, and then Jamie runs a terrible business and it collapses, and now Dakota wants his money back? Well, he doesn't have his money anymore. I may have it on a spreadsheet somewhere, but I don't actually have it. So now Dakota's out of its money. And that's bad. In fact, your dollar means a dollar because these folks tell you it means a dollar. And you trust them, and so you use it as a dollar. But if you didn't trust them, you wouldn't use currency. Our system would collapse. Before the Bank of the United States, the only forms of currency that we had were banknotes. Meaning each local town, their United Community Bank, whatever they called it, issued banknotes. And those were forms of currency, not to be redeemed at any other bank, meaning that you could only exchange in commerce in your little town. And if you traveled towns, you needed an outside form of currency. So the Bank of the United States dates all the way back to James Monroe in the early 1800s. Our fifth president was a part of this movement to nationalize our country by coming up with a national currency, which we wound up with the Fed as a result. So in terms of regulating banks, what does that mean? Well, they enforce laws that deal with consumer borrowing. So let's say, for example, Naomi wanted to buy a house. Awesome, Naomi, great job. Like, way ahead of the curve, right? Most folks don't buy a house until their late 20s, early 30s. So Naomi goes to the bank. What sorts of questions should a bank ask her? In theory, Naomi, as a teenager, could buy a house, but what sorts of questions would they need to know first?
How she's gonna pay for it.
Yeah, ultimately, how is she going to pay for it? And she's going to need to give them a solid plan. How is she going to pay for it? You know, they're going to need to see her tax returns. How much money did she make? Does she make enough money each month to pay the bills? And they're going to need to know, is that sustainable? Is that sustainable? Is she going to maintain in this career? Now, if the bank had no oversight, they might engage in what's called predatory loaning. Predatory lending. Meaning Naomi really feels like she can do this. The bank's really not convinced, but they're going to loan her the money anyway and charge her 50%. Isn't that the setup for most gangster movies? You know, you owe them money and then they send the people with the clubs to beat you up because you can't pay it, and you owe them now double what you borrowed. Okay, so the reason those are gangster movies is because that's an illegal practice. That's called predatory lending. And a real legitimate bank can't do that because the Fed won't let them do that. And also, they regulate connections between the United States and foreign banks. These are the guys that are mad at China for manipulating their currency values. These are the guys who don't manipulate our values in international trade. And so finally, they are the government's bank. What do you mean? Well, they hold the government's money. All the money in the entire country, all of your dollar bills are representations of value. And the actual value is held and sustained at the Fed. They also sell bonds and treasury bills. Now, I'm not just talking about the hokey bonds like buy war bonds, but I mean, really, they are the ones who borrow money on the behalf of the government. You know, so when James Polk shouted, "American blood on American soil," made for a rousing speech in the war with Mexico. But then he had to go up to someone just like the Fed. It was called the Bank of the United States back then. But he had to go up to them and he had to say, can we, please, please, please. You know, and ultimately they're the ones who have to borrow the money. Now, granted, he appointed their chair. So instead of can we, please, 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 you can say do. But they're the ones who issue the currency. You know, so I really do want to go to the place where the money is made to see the big giant crates of money, you know, as they hit the button to print off more. Because this is where it comes from. You see, that's monetary policy. Monetary policy means changing the rate of growth in the money supply and circulation. And this affects the cost of money, and this affects the availability of credit. If the Fed raises interest rates, that restricts borrowing. It's a very simple process. For example, when my wife and we got a car for her this summer. Went to CarMax. I like them, but I also don't trust anybody. So when they quoted me on their own payment scheme, we said, well, let's check with a few banks before we sign off. So we went to our home bank, United Community, and we said, what can you guys do for us in this car loan? Can you match what they got? And they said, well, let me crunch some numbers here. And just based off the interest rate, they knocked a year off our payments. Just for a simple thing like a car loan. Just a simple thing like an interest rate. By lowering the interest rate, it knocked a year off our payments. And we were like, sold, we'll go with you guys instead of CarMax. Now here's the thing. If United Community had not quoted us a better rate, we wouldn't have got that car. The interest rates turned out to be one of the biggest factors in our decision to buy a car. Why? Because ultimately it's how much per month are you going to be paying. Interest rates either encourage borrowing, meaning pushing out money to the people, or restrict borrowing. Now, it's spelled out for you. Higher the interest rate, the less money you're going to see in circulation. Because what else do we borrow money for? I mean, everything, right? What do you borrow money for? Well, my little sister-in-law borrowed money to buy a MacBook Air. And it is really fancy, but, we kind of rolled our eyes a little bit. We're like, do you really need that right now? But whatever. That was me being old and grumpy. But she borrowed money to buy it, whatever. Now she has a cool MacBook Air. Well, that's good for her because she really likes it. That's good for Apple because, that boosts their stock. And that's good ultimately for the people who make the MacBook Air. And that's good for the economy as well because those people are getting their income and they're using that. And that's, again, that little interest rate encouraged her to borrow and push that money out to the economy. Now, if the interest rate had been stupid high, she might have thought twice about it. I mean, maybe. Might have thought twice about it, but yeah. And that would lower the money supply. So what tools does the Fed have at their disposal? The tools that the Fed have at their disposal. Number one, they can lower the interest rate. That's called a discount rate. It's very simply, these are rate changes on interest loans. They can also raise and lower Federal Reserve requirements for member banks. This means that every bank in the United States that is a member bank of the Federal Reserve is required by law to hold a certain amount of money at their property. It's why banks have the big giant safe with the fancy locks and all that. Because by law, they are required to hold a percentage of the money that they have in circulation. So in theory, and I don't know the percentage because it's changed from day to day, it depends on what the Fed desires, they could say, okay, United Community, you've got to hold 30% of all the money that people give you. 30% has to be in that safe. So in theory, 30% of their customers at any given time could show up and say, I'd like to close my account, please. And then they go back there to the big stacks of money, and they can hand that out directly to 30% of their customers. And that's all based on trust. Now, in times of a really unstable economy, the Fed might choose to raise that requirement because maybe more people in theory are going to be drawing out their money. In times of a stable economy, the Fed might choose to lower that rate, and okay, 10%. And the Fed can also engage in open market relations, meaning they might buy up some of the debt, they might buy up some of these bonds, and that means they can stimulate the economy that way. Now, the Fed is very effective for a number of reasons. For one of these, it can move quickly. The reason why we have a president, some countries, in fact, our country tried to operate without a president for 7 years. It failed. We need a president. We need someone who can move quickly. And the Fed, working directly under the president, is part of that. You see, they can quickly buy and sell bonds. They can quickly change interest rates, meaning they can quickly stimulate the economy. So, during the Great Recession, I know you guys were babies at the time, the Fed moved to stimulate the economy and pushed out trillions of dollars to the economy through a number of different programs. That was Obama's first act in office, was to stimulate the economy through a massive spending bill that the Fed enacted on his behalf. And so, in terms of what can they do, basically all of these things. So,